This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Global supplies of diesel are dwindling as refiners struggle to keep pace with rapid post-pandemic demand recovery, exacerbating an acute global energy shortage which has already sent the prices of gas, coal and crude oil soaring. At a time when global central banks are fretting over inflation rates not seen for decades, diesel shortages would push up fuel and transportation costs further and add more upward pressure on retail prices. The US and Asian diesel imports on which Europe relies have been limited in recent weeks due to higher domestic consumption for manufacturing and road fuel purposes.
OPEC said on Thursday world oil demand might rise even more steeply this year as the global economy posts a strong recovery from the pandemic, a development that would underpin prices already at a 7-year high. Tight oil supply has also given impetus to booming energy markets, and the report from the Organization of the Petroleum Exporting Countries also showed the group undershot a pledged oil output rise in January under its pact with allies. In the report, OPEC said it expected world oil demand to rise by 4.15 million barrels per day, BPD, this year, unchanged from its forecast last month, following a steep rise of 5.7 million barrels of oil per day in 2021.
Moving on to the top news in the energy sector.
India's fuel consumption fell in January after scaling a 9-month peak in December, government data showed on Wednesday, as COVID-19 curbs in several states hit mobility and industrial activity. Fuel consumption in the world's third biggest oil consumer, a proxy for oil demand, totaled 17.61 million tons, down 3.7% from December and 0.2% from a year before. Data from the Oil Ministry's Petroleum Planning and Analysis Cell showed. After relatively strong recovery during the festive season, recovery is taking a respite. Recent surge in COVID-19 cases should have played a role in limiting demand, Refinitiv analyst Ahsan Ul-Haq said.
Oil prices held broadly steady on Thursday after rallying on an unexpected drop in U.S. crude inventories in the previous session, as investors awaited the outcome of US-Iran nuclear talks that could add crude supplies quickly to global markets. Brent crude futures slipped 2 cents to $91.53 a barrel at 14:30 GMT, while US West Texas Intermediate crude was at $89.71 a barrel, up 5 cents, or 0.1%. Robust demand recovery from the coronavirus pandemic has kept global oil supplies snug, with inventories at key fuel hubs globally hovering at multi-year lows.
Next, we have the top news in metal markets.
Gold prices were range-bound on Thursday, after hitting a 2-week high earlier in the session, as investors awaited U.S. inflation data for pointers on the next moves in the U.S. Federal Reserve's monetary policy tightening plans. Spot gold was last down 0.1% at $1,830.41 per ounce at 13:19 GMT, after reaching a 2-week high of $1,835.67. U.S. gold futures fell 0.2% to $1,832.40. Gold finally appears to be rediscovering its place as an inflation hedge and is now moving independently of U.S. yields, said Michael Hewson, chief market analyst at CMC Markets UK.
Aluminium prices raced to their highest in more than 13 years on Thursday, driven by persistent worries about smelter closures and shrugging off a surge in inventories. Copper and other base metals were also buoyant ahead of U.S. data as investors scooped them up to hedge against inflation. 3-month aluminium on the London Metal Exchange gained 0.6% to $3,286 a ton in official open outcry trading, its highest since July 2008. We will now look at the top news in the agricultural sector. U.S. soybean supplies will be smaller than previously forecast as demand from the crushing industry rose, the government said on Wednesday. The forecast reflects a shift in the U.S. soybean industry, as demand for biofuel made from soybean oil and processed soy meal used in livestock feed rises and China's demand for soybean imports cools. U.S. soybean ending stocks for the 2021-22 marketing year were pegged at 325 million bushels, The U.S. Agriculture Department said in its monthly World Agricultural Supply and Demand Estimates report. 40 million lower than the government's January outlook but above the average market forecast of 310 million.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.